Hello friends, how are you? So here we are once again with our knowledge based series Stock Market Patashala. In the last series we talked about what are the various types of shares. After knowing what are the various types of shares, here we are to explain you 10 commonly used terms in stock market. You must have heard it's a bull run. You must have heard it's a bear. And you would be wondering, what is this bull? What is this bear? And we are here to explain you all those terms which are frequently used in stock market. The first two terms that I want to explain you is bull and bear. If you by any chance see office of any of stockbrokers, you will see a bull being kept there. Or you will see in newspapers a bull and bear. You can see in here also a bull and a bear is there in the picture. What does bull and bear means? Obviously these are two animals, but how they are linked with the stock market? So let me explain you. So when I talk about bull, bull always try and look up, okay, and that's where it is linked with stock market. So whenever the market is going up, the stock prices are increasing, that phase is called as bull run. Bear, so when you see a bear, it would always put its head down and then walk. So that's where when the market is falling, that phase is called as what? Bear. So when the Satyam fiasco happened, it was a bear run. Narendra Modi ji was appointed as the Prime Minister. After that, stock market has increased. That is called as what? Bull run. So I hope the first two terms are clear to you. The next two terms that we need to understand is long and short. In the market, you would hear these terms, he is long on a particular stock. So there are a lot of shorts and people are doing the short coverings. Let us understand the meaning of long and short. Listen to me carefully. Long means what? When I buy a particular share and then sell it, that is called as long. So basically, if you are expecting that prices of a particular stock would go up, what will you do? Obviously, you will tell, ma'am, I'll obviously buy that share. So that is nothing but that procedure in stock market is called as long. So first you buy and then you sell, that is called as what? Long. For example, I am expecting TCS is coming up with a buyback of securities. Its share prices would go up. What will I do? I'll buy the share, keep it with me, and after that I'll sell it. This entire procedure of first buying and then selling is called as what? Is called as long. What is short? So it's just opposite to what? Opposite to long. In short, what happens? First you sell the securities and later on you buy the securities. When will you do that? Obviously when you are expecting the share prices to go down. Now for example, you know about the entire fraud which has happened in a company. So obviously when the fraud happens, the prices would go down. So in case of PNB, Mr. Nirav Modi owned a company. The name of the company was Gitanjali Gems. So when the fraud comes out, obviously what would happen to the share price? Share price would tank down. In this case, if you don't own the shares and you still want to earn money, what will you do? You'll first sell it off. By the day end, you'll go and buy those shares. So this is called as what? Short. So first you sell and then you buy. This entire process is short. In short, you are not holding those shares with you. You first sell them and later on you buy those particular shares. But there is a lot of risk involved. What if by the day end prices go up? Okay, you would be in losses because you would have sold, let's say, at 80 rupees. You are expecting the prices to go down to 70, but it has increased to 85. So that 5 rupees may become a loss for you. So 4 terms till now we have studied. 1, that is bull, bear. So next term is what? Long and short. The next term that is there is called as intraday. What is intraday? intra, you would have heard this term. So basically intraday means buying and selling of securities in the same day. The people who do this, they are called as traders, intraday traders. So they just buy securities and sell at what? At minimal differences in the prices. That is called as intraday. They believe in making quick profits rather than keeping it for a longer duration. Whereas, what is meant by investors? So, investor is a person who believes in keeping the securities for a longer duration. He believes in value unlocking. He does not believe in making small and quick profits. He believes in what? Making profits over a period of time and more profits. That is called as what? This person is called as investor. The next term that we need to understand is portfolio. My portfolio has gone up. My portfolio has gone down. What is this? So, portfolio is nothing but combination of shares is called as portfolio. So, if I have more than one security, one share in my entire holding, that is called as what? That is called as portfolio. So, more than one shares when I hold, the combination of all of them is called as portfolio. The next term that we need to study is correction. What is correction? Market has corrected. So, this is again a term which is used to define a specific phase. So, if the market is going up, obviously it would not happen that all the days it would keep going up. Some days it would be up, some days it would be down. When it is going up, it is a bull run. All of us know it because every time it is going up, it is making new highs. So, it's a bull run. But in that bull run also some days correction would happen. Like some days you fall sick, market would also come down similarly. Every day would not be just a bull run. So, that is called as correction. Let me give you an example. For example, right now the market is trading, let's say at 10,000 rupees. 10,000, the Nifty index is 10,000 and it goes to 11,000 in the bull run. From 11,000, in 10 days it reached to 11,000 and on 11th day it corrected for 200 points and it reached to 10,800. So, this tendency is called as what? Correction. When a market is going up, in that a small pause where market comes down temporarily for a small period, that is called as what? That is called as a correction. The last two terms that we need to know in the stock market is bonus shares. Company is coming up with bonus shares. Let's go buy the shares of the company. What is bonus shares? So, when I talk about bonus shares, guys, these are the shares issued by the company to the existing shareholders for the loyalty they have shown to the company free of cost. Free of cost? Yes, free of cost. In what ratio company issues bonus shares? That is purely decided by the company. For example, company may say bonus of 1:1, which means if I am holding 100 shares of the company, company would give me free of cost another 100 shares. So, bonus shares is nothing but free shares which are given by the company to its shareholders on a specified date. The last term that we need to study is dividend. What is dividend? Dividend is a part of profits earned by the company which is given to its shareholders. Obviously, shareholder is holding the shares. You expect certain profits. You give loan, the other person expect what? That you would be getting interest on it. So, when you give the loan, you are expecting that you will get interest on that particular loan. Similarly, when you are investing in the company, you are expecting some returns from the company and company gives that returns in the form of dividend to its shareholders. So, dividend is a part of profits which is given to the equity shareholders for holding the shares of the company. That's it from my side. I hope this video was helpful for you. Thank you so much.